Good morning, folks, and welcome back to Almus Market Mornings. So, the additional 25% penal tariff on India has been implemented starting yesterday. It affects roughly 55% of India's exports to the US. The labor intensive industries like jewelry and textiles have been hit with this, while electronics and pharma are exempt as of now. There are no further updates on this front, and we'll keep you updated as and when we get the fresh developments. Currencies, meanwhile, have broadly remained in range, but we are noting the stronger Yuan daily fixed by the PBOC. Good morning, JK. What are some key developments you are tracking? And I would also like to hear your thoughts on the stronger Yuan fixing.
Good morning, Swaraj. Yes. Yeah, I think if at all anything meaningful is happening in the currency market, it is the Yuan fixing. Today also they fixed at a 9-year low at 7.1068. And uh, I don't know if it is a part of understanding that, Yuan will be allowed to strengthen. So we'll have to observe the trend for some more time, because the Yuan fixing lower has happened even as other currencies have remained in the almost at the same level. So that is something to watch out. And of course, as you mentioned, in India, the 25% tariff, additional tariff has gone into effect from yesterday. Definitely, it is quite a negative for our exports, a major part of our exports. Although not seen a major movement in the currency, even on a holiday, there was a test of 87, 85, but then quickly retreated from there. Possibly central bank is also present at those levels to intervene in the offshore market. So we'll see that the stocks continue to fall in India, and that is because of the perception that our growth will be affected due to lower exports. There's one statement from Treasury Secretary Besant, which of course doesn't have immediate implication, but this he did say that India and the US will eventually come together, but then market does not know when that will happen. And there's also some advisor, White House advisor, he said that India can get 25% off tariffs if they stop buying Russian oil. It's nothing new, it is known to everyone. But then the key is two things can change this. One is if the Russia-Ukraine war suddenly finds some stoppage or a positive development. As of now, doesn't look like. Or if India, considering the overall impact on exports of additional 25%, if India decides to uh, s- seek other sources of oil from than Russia, because in any case, oil prices have been going lower. So that is a big decision which the government will have to take, balancing which is better. So other than that, there's been nothing major. Rupee continues to be in the range of 87, 88, but actually the base is actually increasing now. Actually, it's 87, 40, 50 is proving to be very good support for the rupee. In the international market, it was one of the, I think, long lull period as far as economic data is concerned, barring some minor data. In the US, of course, durable goods orders, the core durable goods orders are better than expected, better than last month. And then consumer confidence also slightly went up. But all focus is actually on what is going to happen for in September FOMC. While the market still discounts 87% probability of a rate cut, there are doubters in the market. Some people even now read Powell's statement as neutral. And there are voices like Mr. Williams, an influential member in the Fed. He was saying that it is still a data based. So the market is, at least from the action in the market, a dollar is not being sold off. I mean, the initial sell-off has been kind of reversed, and dollar remains almost at the same level where it was before the Powell speech. The coming data today and tomorrow will be quite interesting. GDP, of course, expected is 3.1% for Q2 in US versus minus 0.5 in the previous quarter, which was affected by front loading of imports. So that was skewed actually. We need to see how whether we come at 3.1% or lower. That is something to be seen. Also, we have the weekly jobless claims, which last week jumped about 11,000, and that is a trend that the market will keep observing. One thing about the weekly jobless claims is that the government laid off employees, they continue to get wages up to in October and November, and those people will not be filing for claims. So once that compensation to them, monthly compensation stops, you may see suddenly a jump in the weekly jobless claims number also. So that's something people are, looking at the fact that it is currently being understating the number of unemployed. So that's something to note. Core PC number tomorrow, obviously after the PPA number rose sharply last month. Whether it is reflecting in the core PC, price pressures, that is something the market will be looking forward to. Meantime, the yields in the US are steadier, but there is a steepening in the sense that the short term remains lower, but the long term remains higher, and that is not helping the US administration, because the huge 37 trillion of debt, as and when there is a rollover, they have to pay higher yield for the long-term paper issuances. That can be a big negative for the bond market. In fact, the yields in UK and Japan have also been rising slowly. So as I shared in the previous update also, I think fiscal concerns will continue to be something that will be on the radar. It includes even India also, where because of the higher fiscal support for the export sector and the GST reductions, government will have to fund itself through higher borrowings, which is already seen the yields rise. So bond market will be definitely on my radar, and any big risk off there could lead to a sell off in the stock market as well. Or the stock market itself has been in a very strong zone after yesterday we had Nvidia reporting better numbers, but the reaction has been to sell the stock because it has risen 35% this year and after tripling last year. So valuation has been a concern, and that will be something that the market will be noting also. The MSCI All Country Index has also been now at the highest level. So the valuation, as I said, to repeat, the valuation in stocks is going to be something that we'll continue to watch. Any negative news from the economy, or no rate cuts or higher inflation could be a large trigger for the stock market. So that is something on the radar. So we awaiting more data and these indications from the monetary policy in the coming days to get a sense of next direction in the currencies. Thank you.
Thank you, Rick. And I think the key points remain the yuan fixing, which is, I think, still quite interesting that it is at a 9-year high against the dollar. And this is happening when the other currencies still remain in a range-bound manner. When it comes to domestic India, the 25% additional tariff has gone into effect. Currency as of now has not seen a major movement. Offshore levels seen were 87, 85, but it as of now seems central bank intervention has kept the losses contained. 87, 40, and 50. That's the levels JK mentioned that would be acting as a new base now. The strength is limited. Tomorrow, it's the US GDP to watch out for, and the related price pressures data that will also be released. Fiscal concerns are driving bond yields higher for UK, Japan. In fact, we have also previously covered India's rising yields due to the government's fiscal plans. That's it from us, Shiv. Thanks for listening. We'll catch up tomorrow with the fresh round of updates.